Hey there, welcome to the Catalyst Report. I'm Amy Lewis from the KFBK Morning News with Brandon Haefele from Catalyst Mortgage, the CEO and founder. This is going to be an interesting conversation, I think. So you have found the home of your dreams, right? You found it in this beautiful development. It has everything you've dreamed of. Do you go with the builder's lender, which they recommend, or do you go with your own? So,
you know, Amy, this really is a very interesting discussion, and in our industry, it's divided.
Really?
You know, even having this discussion, I know some people are going to disagree with us, and I welcome disagreement. I welcome the discussion because, you know, you have a development. There are several going on, of course, in our region. You know, from Lincoln to Rancho Cordova to Folsom, and each builder has a preferred lender. And with that preferred lender, when you go, there's sometimes a credit for closing costs or incentives.
Right.
As an industry, many independent mortgage bankers, independent mortgage lenders that are not affiliated with a builder, or banks that are not affiliated with a lender or loan officers, will say that they do not like the fact that incentives or builders themselves push consumers to use that lender. Partly, you know, is the consumer really getting the best interest rate? Why is it being incentivized?
Those are the questions.
Some types of credit. Those are things that the industry and a lot of different groups do not like. But at the same time, there can be benefits to a consumer in that case. For example, you buy a home, and I'm going to use ABC Mortgage Company, or I'm told if I use ABC Mortgage Company, I'm going to get $6,000, $7,000, $8,000 in credits towards closing costs, or I might get additional incentives for upgrades. That might be definitely a benefit to you if you go that route. And so really individually, each scenario is different. It can have some benefit, but also it might not.
You know, I'm thinking though, can you, as a savvy consumer, you know, you've been educated a lot through the Catalyst reports that you've seen over the last 2 years almost now, can you go in and say to the development that I want that house, I'm not going to work with the builder's lender, but go to somebody else and say, this is what they're offering. I want you to offer me that as well, and I'll go with you.
You know, that does happen. And you know, at Catalyst Mortgage, we've seen that. I know other mortgage companies as well have had people that are working with a preferred lender of a builder. They're given their offer, they go elsewhere and shop it around. And I always tell a consumer, shop it around no matter what, no matter who you're working with. But the problem is, and this is where the preferred lenders can get you, is whatever that lender credit is, it's only good if you use from the builder, will only give it to you if you use their lender. So if you go outside, it might not even be worth it. What we've started to see more and more of, though, is a consumer will go ahead and do a loan with that lender, that builder. They will have that credit be given, plus, as we've talked about before, taking a slightly higher interest rate to get even more closing costs paid for. And then they might not, they might refinance 2, 3, 4 months down the road. The builder and lenders across, and we tell our clients the same thing, just like everyone else. You really want to wait 4 to 6 months to do a refinance. But one of the main reasons people say this isn't just because of letting the loan be seasoned. It's really because any credits that have been given for your loan would have to be essentially recaptured by Fannie Mae and Freddie Mac. And this is a bigger discussion, but the point is, when you have a credit that's given under a certain period of time, and if you refinance quickly thereafter, that builder or that lender, or however it's being structured, might have to repay that credit back to the agency that gave it to them. So,
but as the home buyer, I'm not responsible.
You're not affected in any way, no.
Right.
But so as a home buyer, you really have to look at all options that are available. Yes, of course, definitely look at that builder, see if that offer is a good offer. Okay, it looks great. Pencils. I'm getting a credit. I'm getting a great rate. I'm not paying points. Then take it and shop it around to 2 or 3 different mortgage companies. I definitely recommend going to a bank. I definitely recommend looking at an independent mortgage company. But the point, and do I disagree? Do I disagree with the idea that you have to use this lender to get that credit? Absolutely. You're essentially trapping somebody into that position where they have to use this lender, or they lose the credit. Whereas they could take that same credit and go to mortgage company B and C and get even a better interest rate if they have that same credit. But you are literally trapped to using them.
So, not to open any closet doors and find skeletons inside, but are there conflicts of interest that you've seen between builders and lenders?
I think that when you get to a conflict of interest standpoint, it really comes into when the credit is not being given if if they remove the credit if you don't go with their lender. That's where it becomes that you're forcing
You're stuck.
somebody, you're tying them down to use this lender. And to me, that's wrong. Our industry, is
But it's not illegal.
It's not illegal. The CFPB has looked into this, and they're before the administration change, they were taking a serious look at that. And since then, that look is being backed off a little bit. But no, it's something that should not happen. If a builder is going to give a credit, in my opinion, it should be given to whatever mortgage company you work with, no matter who it is, as long as you are truly pre-approved. And I'm okay with even the idea that you have to get pre-approved with the builder's lender just to make sure that you qualify. That makes sense. But that credit should be given elsewhere, no matter who you work with.
Yeah, and you have to define CFPB.
Great. Consumer Finance Protection Bureau.
Yeah.
And that's a thank you. But
Yeah.
it's important that no matter what, if you are going to get this credit, you are going to go with that lender. Still shop the offer, because if by some means, let's say the credit's only $3,000, and usually they're much bigger, but let's say it's only $3,000, you still might be able to go elsewhere and achieve a better interest rate. But again, being the smart consumer, shopping around is what's most important.
Shopping around, doing your research, and that phrase "due diligence." I mean, you do owe it yourself to make
Really?
sure that
You really
you
do.
are an educated consumer,
Yes.
which is a large part of the Catalyst Report, which is why we do this. And I know this may be like for another discussion, but there are always scams out there, my friend.
Absolutely.
Especially if you're looking for, especially if you've got a home that you want to refinance because there's damage done or anything like that. I mean, are there scams to really look out for, clear-cut scams, or is it just pervasive anywhere?
Are we talking about specific, like with home buying? Or?
Yeah, home buying.
All right, well,
Home buying scams.
I would say most of the things that we've seen recently would be rent to own. You'll have people that will say, if you move into this house, rent to own, we're going to give you
Yes.
some type of deal. But in the contract, it's really not a rent to own contract.
Yeah.
We saw that a lot in 2006, 2007.
Absolutely.
Mostly, with Hispanic, people were preyed upon.
Or
in
didn't
that
understand
situation.
the
Exactly.
contractual language.
That's the big
Yeah.
one. And so, if you're ever going to get in those kind of situations, have a second look, have a third look. Remember, in the mortgage industry, you have one person that you trust, even if it's somebody that you've known for years. I don't care if it's your cousin, I don't care if it's your brother. Have it reviewed by somebody else to see if you're getting a fair shake.
Do you have to
if it's a
pay
good
for it?
offer.
To have it reviewed
Absolutely
by somebody
not.
else?
Mortgage companies, because again, they want to compete for your business.
Yeah.
So if they're going to if they have something that you're kind of questioning or it doesn't make sense, have it reviewed by somebody and really look at it. But also, there's great programs through the Bureau of Real Estate. You can go to the BRE website, Bureau of Real Estate.
Okay.
Also, the DBO, Department of Business Oversight. And there are different things that help. Chats, help centers that you can call to have things questioned, or if it doesn't sound right, hey, is this a legitimate agency?
Yeah.
Definitely do your research.
Or chat centers now that are online too. It's
Exactly.
very easy. You can just sit in front of your computer and write out your questions. So lots to take in, right? If you've got a friend who's in this kind of a situation, whether they're looking at a home that they found in a development and they're kind of questioning whether or not they should go with the builder's lender, you do have options. So let them listen to the Catalyst Report on the Catalyst Mortgage Facebook page or at catalystmortgage.com. Or you know what? They could call Brandon or anybody at his great group, 287-7777. That's the number. Don't forget, you have to dial 916 first now. That's the only way you get through. It's also online at the Catalyst Report, Catalyst Mortgage Facebook page, or catalystmortgage.com.